What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some events to help you get prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. So, what is going on? As always, before we get started, go ahead and throw this up for the upcoming week to kind of get you a little bit of insight into what's going on this week. This week is going to be a big week. Before we dive into this week, though, let's give kind of a recap of what happened this past week. Now, we've had some big earnings already. Uh, as far as what we've can establish going into these coming weeks, going into monetary policy this week, the market has been waiting to see what has happened with big tech. Now, starting off about 2 weeks ago, we heard from the ECB that they were coming in at a 25-point basis move. At least that's what we're talking about. That changed. Now they said they're rolling out a 50-point basis move, but not only one, but two more 50-point basis moves. Now, we are projecting to have a 25-point basis move. There's been a lot of emphasis on 25-point basis move prior to last week. And then we had Bullard come out and straight say that no, there's strong possibility we could still have a 50-point basis move. Now, over the past week, that story changed yet again. Or there was a rumor that things would change and it would only be a 25-point basis move. So, with those expectations, the market started to pick up. We've had earnings this week. We had Microsoft, we had Tesla, we had some chip plays, ASML. We've had Lamb Research, BA come out this week. Again, a lot of earnings, even Tesla, mediocre earnings, barely hitting par. Expectations are really low. Things are not great. And the fact that the dollar is still high is a cause of concern. I think right now what you're seeing is I did read an article about a lot of institutions potentially trying to liquidate for what could be potentially coming. Now, given the thesis that I've had to this point, it's hard to really kind of determine. There's a lot of misinformation, a lot of data sets that I think are incorrect. But we are in a very parabolic move. We are in earnings mode. It's been a while since we've seen a very strong earnings like this, but when you get hopium added on top of the earnings, these are the way earnings used to run about a year and a half ago. Anytime we had earnings cycles, we'd have these nice, big, huge pumps, especially from tech. Considering that tech has been beaten down so much that it was good to see some life in tech this week. But again, earnings weren't great. Expectations were barely meeting. Uh, Big tech is continuing to lay off, which is not a good sign. That wages, you have to understand. Yes, there's a lot of openings, but for good jobs, there is no. You can open a bunch of minimum wage jobs just to show growth, but understand that there is not people are having to take two or three of those jobs, minimum wage jobs, to hopefully combat inflation. So this is where you're getting a lot of misinformation about what is currently going on. And this is why we have earnings, right? And there's going to be continued layoffs, right? We still have to, uh, the way the Fed is projecting layoffs, you're seeing layoffs potentially of 1 million plus layoffs this next in the coming years, and you're starting to see a lot of roll-offs come from tech. When does that start hitting on other industries? Again, inflation is not going to come down fast enough. The Fed is not going to, even though they may stop raising rates, it's going to have high rates, still going to be floating around 5 at some point for a while. Now we are currently sitting at 4.5. If they want to do 25, they can continue to roll out 25-point basis moves for the next couple of months. And maybe this is the hopium spike that people think that things are going to eventually pivot. But you have to understand that these rates are going to be held at a very long period of time. And so that is what is crushing the market single handedly. But on the same token, the Fed have to keep them high um, to stop from inflation running back up. It's not the greatest of tools. Obviously, people lose jobs, people lose a lot of money during this time. It's not great, but it is one of the tools. It's essentially the only tool that they have to help with what is currently going on. So, with that being said, again, earnings are not looking great, and from some of the best companies. Now, you are rolling into this week with first new monetary policy, which is going to be out on Wednesday, followed by a Mr. Powell, and then you're going to have non-farms on Friday. Yes, there's plenty of other data out there, but these are the ones I look at. These are the ones that are going to monetary policy in general is going to be very pivotal. It's going to dictate the rest of the year. Non-farms, again, going to be important to watch because once people start rolling off of severance packages, there's a lot that comes into consideration here too. You got a lot of people that are rolling into retirement, right? They are considered no longer looking for work. So you don't have them reporting unemployment, right? And we have a huge generation that is coming, that's going into retirement. So the numbers are going to look different in general, period. Your biggest workforce you've seen in generations is retiring. So yeah, of course numbers are going to look good. Of course numbers are going to look good when people are on severance packages and still getting a paycheck. As long as that paycheck is being cut, they're considered employed. So again, you can't beat around the bush around what's going on. Nonetheless, we are pumping. And so, being said, let's look at this week. This week, again, we got federal funds rate, monetary policy Wednesday, going to be very pivotal. Non-farms be very pivotal, could feed to whatever side that plays into um, monetary policy. Again, upcoming events, obviously, monetary policy this week. Some core inflation. So, we're not getting core inflation until the 14th. So, that's something to consider as well. Although on the next monetary policy, we'll have two cores before then. So it'll be interesting to watch because there's been a lot of rumors and potential thoughts and ideas around inflation could start spiking again. Um, it just depends. There is a lot, we have to understand there is a lot of spending. Spending hasn't slowed down, which is incredible considering what's going on. Um, but it's going on to credit cards. Where are people getting all this money? Now, this is some thesis I've kind of thinking on my own too, as well. Other people have taken other gigs essentially to cover inflation, right? And so I'm in the crypto space myself a lot, and so I know a lot of people make money that way as well. Are people essentially keeping up with inflation with other means? And not reporting that could be a possibility as well, considering what's going on. But nonetheless, it's still hurting a lot of people right now. The housing sector, again, there's a lot of reports saying things are great and fine and dandy. A lot of pending sales. In my mind, that's not. None of those have gone through, right? That's just a transaction that hasn't gone through. People have to still qualify. There's a lot of houses that go pending and don't actually get qualified. So, and right now, considering that prices for rentals are so high, it's still almost cheaper to get high interest rates. So in the long run, it is not, but in the short run, if you can get a deducted monthly expense, people don't look at the overall price tag, right? The total at the end of whatever it is in 30 years. People look at the monthly expense. People gauge what they can afford off of monthly expenses, and so you have to keep that in consideration, right? If people can still pay less even with a high interest rate, they'll still try to get qualified. The question is can they get qualified? And that pool is diminishing quickly. And considering there's going to be some more rate increases over the next couple months, even if that's only 25 points. So, being said, Upcoming earnings this week. Another huge week. After this week, I think things are really going to start dialing back as far as earnings. So if we do get any sort of pump, I think it may last this week, and then after that, again, you have to realize that we are going into a normal down cycle after this earnings. One of the bigger normal down cycles of the year. Before the market upticks and starts running back up towards the back half of the year. So you have to understand this is a normal cycle. The question is it going to be fed by some sort of recession concerns or inflation rises again? Whatever the question is, that's a concern here. So we will see coming into this week. But Tuesday we got AMD, we got CAT, we got UPS, some big ones on Tuesday. Wednesday we got Meta. Thursday we have Google, Amazon, and Apple. Thursday is going to be a big day on that scale, as Amazon will be interesting to watch, especially with the cloud space. Microsoft again projecting not things to be very good at all. There's been a decline in cloud over the past two quarters, and then retail has gotten some really negative numbers already as well. So we have to definitely watch that. I believe Snap is actually reporting too this week. I have to look that up, but Snap has held a lot of weight, even considering it's it's been on a steady decline over the past probably year or so. But it's had a great impact on the market just because it reports a lot of ads as well, and considering the whole drama with Apple. But nonetheless, we're going to get some big earnings here and see what's going on there. But prices. Now, that's something I talked about. I expected SPX to jump up a little bit this week because of monetary policy. Has increased about roughly around 20 points. So they're trying to price in a little bit more there. Tesla had an absolutely parabolic rip over the past week, and that is really priced in. They're really pricing in a lot this week. 18. Apple's increased about 3 points. BA's increased a couple points. JPM really hasn't shown much there. But something to keep in mind, something I've been saying, that financials and value have ran parabolic for essentially a whole quarter and some change, and now they're kind of sitting stagnant. The only sector that has had any room to really push to the upside was tech. Now you're starting to see that tech has had these parabolic rips over the past week. I can essentially could see that continuing this week, but the problem is that now essentially all industries, the industries that are that hold a lot of weight, are essentially getting ready to could potentially all look the same and potentially move to the downside. Again, there's a lot of bad data, inverted yield curve, all those things really do play big and are pointing to a recession. There's going to be continued layoffs, but nonetheless, those kind of things don't dramatically impact the market directly. There'll be an event that occurs that will cause the market to panic and start to really sell. What that event looks like, we don't know. There's a lot of different scenarios that could happen that cause the market to fail, whether that's in housing, whether that's in, I know auto loans are going across that same issue that housing had in 2008, right? Like anybody could get was getting auto loans over the past 2 years, right? And so the spending hasn't slowed down, which is mind-boggling considering the credit card growth that we've seen over the past week with Visa and MasterCard, and then also continuing to see the savings rates are still very low. So where are people getting their money from if they don't have savings and their credit cards are maxing out and they're spending a lot of that again on everyday, just baby formula and milk and average everyday things that you need. So that's what's concerning. But we'll play to the upside. We'll take advantage of the upside, but also know that I would not trust this pump. And something I want to show you guys too as well. So parabolic. Let me take these studies off because sometimes it's just really hard to see. Oops, that's probably the wrong thing. Studies, remove all studies. Yes, this way it's a little bit easier to see this. So we've had an absolutely parabolic rip, especially over the past week. Again, the market end of close on Friday. Market got pushed right back down to it, almost tagged 4100. It came pretty close, but got pushed right back down. It's being held here at the 4076. So there's a really hard ceiling right here. The market's just not letting getting carried away. I think this is because the market wants to hear what monetary policy is. Is it really 25-point basis move? We could rip up to the next 4,200 this week if that's what it is, or you can come in at 50 and this thing could tank again, back down to potentially 3,800. So that's the question: is what is really going to happen? It's really going to be dictated by monetary policy. So if we continue to run Monday, Tuesday, there might be selling in general. Normally, there is selling going into monetary policy, and then if it's a 50-point basis move, this thing could take pretty hard. But we're going to have to see how that does play out. So we will see. But ultimately, again, this thing needs to. If you want the bulls to continue, what you want this over 4080. Opening on Monday. I don't see that happening. I think we could potentially just float around here. Maybe we even sell back down the 4K mark and then kind of just play this Monday, Tuesday, playing this essentially the 70-point range here until we hear monetary policy, and then that will dictate if we push up to 4,200 or push back down to 3,900. We'll see from that point. But I expect a lot more chop. And this is why you have to, if you want to take advantage of this market, you have to be adjustable because you're getting these 100-point moves. They're big moves, but nonetheless, you're going to continue to get chop until there's actually a true pivot or a bigger event that's going to make this market just completely either crash or I just don't see a reversal to the upside 100%. I don't see that playing out. It's either, in my mind, it's either going to chop or crash until the Fed start to actually like pivot and start taking rates off. I think we need a bigger event to happen for this correction, and then at that point, like I've said, I think then the market would be able to recover and would be a slow grind up at that point. So again, I don't see any parabolic V-shaped recoveries like you saw 2 years ago. That just doesn't happen. And these parabolic moves we're getting, they're not good. If you think this is the way the market is supposed to work, there's just a lot of strain on the market, right? And you're getting these massive rips. I mean, they're good in a sense if you're trading, but nonetheless, I mean, things are just bad in general. So we will see. We will see what happens here. But again, I think we're going to continue to play in this range until we hear something from monetary policy. And again, been big week on decks. We got big earnings, and then after this week, I think the market's just going to either want to continue. If we get bad monetary policy, maybe everything feeds into a good thesis, we could potentially see 4,300 for the next 2 weeks. Could be a strong possibility if we get things aligning the way they should. Otherwise, if we get 50-point basis moves, there's going to be a big correction. And then who knows from that point? I think it's just going to lead to a big correction into more chop. I don't really see anything being clear cut. There's nothing that's going to be clear cut, in my opinion, aside of earnings continue to just make par and we hit 25-point basis move. People might take that as a positive sentiment. We see 4,200. Maybe even attempt to go to 4,300 if we get a good earnings in there, like a good Apple earnings or something, potentially. But everything, again, is looking the same. Your value is holding. Your banks are holding at a very overextended consolidative place right now. They are just waiting, I think, for tech to catch up. And then when tech catches up, you're going to see tech consolidate maybe for a couple days, and then you might see a big dump at that point. So just be mindful. Normally that is what happens when you see, and this is why it's good to watch price action and candles, because you see these things, these patterns, and they play out almost all the time. Not particularly these wedge patterns and stuff. That's not what I'm talking about. These patterns and price action. And so with that being said, it could very strongly happen, but again, we'll see. We'll see what happens with monetary policy. And again, I think if 50-point base move absolutely going to wreck the market. Bitcoin's still holding. There's the zone. This essentially they can't break the 24K. Again, I think it'll be really dictated by what happens with monetary policy. If monetary policy comes out and is on par, could get a little bit more of a rip. Otherwise, this thing is going to correct back down, in my opinion. But we'll see. Look at the dollar again. The dollar, big descending wedge. We'll see if this does break to the upside. Again, there's just too many things looking like they're about ready to reset pretty hard back down to the downside. And that would mean the dollar would rip up here. And again, the wedge would assist in that theory. Tesla, ridiculous pump. It was coming. It was much needed. It's been a while since Tesla's done any kind of pumping, again, with the selling and everything Elon's been doing. Again, their earnings weren't bad. They weren't great, right? They barely skated by, but again, I think people are trying to take advantage. Institutions are trying to take advantage of liquidating positions. To be able to do that, you need a lot of volume to come back in the market. A lot of FOMO, people thinking they missed the bottom, liquidate, get out before the big drop comes. Could be a possibility. Who knows? It could go either way. It's always 50-50. You have to be mindful of that, but you have to be adjustable. So we've already had absolute parabolic rip here. Now, this is a normal Tesla move before, again, 78 points. So we'll see. So even 50 points from where we're currently at, you're still looking at like a drop down at least to 136 potentially. And then again, if the whole market turns, we start getting some bad news, I think it really start dropping. But we'll see. Again, if it's a 50-point basis move, tech will be corrected very fast. So just be mindful of that. So we'll see what happens here. Tesla does need to break out of the 184. If it does, could get another rip up to potentially 200. Then you got the 200 EMA sitting there at the 220. So again, this is the normal Tesla move. We haven't seen a normal Tesla move like this in probably over a year. But this is normally how Tesla moves. This is why people love Tesla so much. But we'll see what happens there coming into Monday. Apple, again, running, getting parabolic. Again, this move is not good. This is setting up for a crash, is what this is setting up for. You don't want stocks to just rip up like this parabolic. Again, it's setting up for a crash and a correction, at least down to 50% of that. So 135, strong possibility for Apple. So we see with Apple, but again, Apple's got earnings this week, so it'll be definitely interesting to see because Apple and Tesla are normally the leaders. So if they get hit pretty bad, it may not be very good. Nonetheless, Boeing, this is what I'm talking about, overextended, consolidating. This thing, I think, everything is going to start looking the same once tech catches up. And then I think you're going to get a big dive, in my opinion. And again, 50% of this, you're still looking at roughly around probably the 170 mark on this. And then again, if whatever it's fueled by could get pretty nasty. So we're really watching to see what happens there. JPM, again, very overextended move here. And then it's been kind of just consolidating and playing, not breaking out. Again, I don't see this ending well, in my opinion. That's just my gut feeling on how this is playing out. Again, that thesis I talked about potentially institutions liquidating positions. So you have to be able to do that. You got to be able to provide some FOMO in there, some good old FOMO, to be able to liquidate a massive positions. So you need a lot of volume to come in and start buying. To do that, you have to push up the market so people think that they're missing the bottom, and then could potentially be liquidating. If that's true, it's true. I mean, it would make sense. Time will tell if this thing starts to crash, right, and starts coming down pretty hard. There's, again, a lot of talk about soft landings. You need to show me that there's a soft landing. Right now, things are still very expensive. And to be honest, I don't know how a lot of people make it by, because it's definitely not easy. But just on regular prices of living, just eating and rental expenses and just your normal expenses are still very high. So again, we wait and we see. But nonetheless, if you've made it this far, go ahead and drop a like button. Till next time, I will see you guys later.